And we are live, and a very good evening to everybody joining us tonight on our significant Sunday review of the
stocks and shares. Good evening. Welcome everybody. And yes, I'm excited to look at the shares that we had looked at last week, and also what the week that's ahead of us.
And just to say, for those of you who's watching the recording, it is today, the 23rd of February. So we are looking at the shares, what has happened in the past week. Now you can see this is a beautiful picture of Jean. He's getting prettier by the day. And let's move over to the charts. Okay, Jean.
Right. Last week we ended the week with let me just get there with one about property, and I said that we can even invest in property via the stock market, and this was a case in point. We looked at Lexington Realty Trust on the New York Stock Exchange. So in the last 5 days, this stock has increased 1.65%. In the last month, 7%, and in the last year 23%. So if you invested in the in the property market, as I am as well, you can compare to what this stock has done and what your properties has done. So it's just another way of accessing the property market. So nobody can really say, well, I don't have a deposit, I can go and buy property, but you can invest in property in this way. So buying property via the stock market is definitely not difficult, and it's just to open an account. So we will return to this theme time and time again, and we'll see how this develops. It is always good to have an interest in property markets. There was another one that we looked at. As we see, this one is doing well, and it has a very good trend. If we just go back to this one, let us just get back. There we go. It has a very good trend. It's keeping its trend at the moment. So we'll see where it will develop to. At the moment, the volume is high, so it's good. Also, just to say, this week actually, I saw a flash notification via the investing.com site, and it gave the existing home sales. So United States existing home sales was 5.46 million versus 5.43 million. So it is higher than expected, and that is why this market currently is also a good market to invest in, because property is doing well in America. Another one that we looked at, and it's sometimes good to look at those that is not doing so well. So let us just see what happened with our lithium company that we spoke about. And you can remember I said that Livent Corporation is a company that has is investing in performance lithium. And look what happened on Friday. It was about a 15% drop in price. But the first time we mentioned this stock was around about in the beginning of the month, 2nd of February, when the price was at that point in time was around about 942, I believe it was. And so this drop has happened because on Friday or Thursday after the close, there was an announcement by the management. The negatives was that they expected lower lithium prices due to oversupply So it seems like a lot of people are on the bandwagon, and they are supplying physical lithium, and also there's oversupply. So that was the negatives. The positive was that there's a higher demand, and currently over the last year there's definitely a higher demand. That's obviously why there was also oversupply, and so the producing companies are reacting by reducing output and delaying or cancelling capacity expansion. So this is a counteract to get the price up and going again. So what is happening at the moment, it just shows us that there's a support here at between the 9 and the $10 mark, and we'll see if that support holds. At the moment it is holding. We'll see what the next week is bringing. If that support holds, then it may this, I mean, it can always come down to the previous support round about the $9 mark. So I would say anything, yeah, between $9 and $10. That is where the support is. We'll see what the price is doing. I won't get too worried unless the price breaks down through the support at $9. Then we'll have to reassess this one.
What does the strategy say, though?
Currently, it is still on a buy, so it hasn't triggered a exit point. So yep,
we are still in it.
We're still looking at this one in a positive way. Yes, so that is just also sometimes what we look at. So when we have first mentioned this, the price is still a little bit higher. It's first mentioned at $9.42. It's now sitting at $10.06. So we'll see where this one is going from here. But that is just what announcement can do for you. And if you're in a very niche market like the commodities, where there's only one item that will affect the price, any announcement will cause,
could have an impact on the price.
Yes, some effect there for us. So overall, if we look overall at the market, the market is a little bit nervous at the moment, and therefore people tend to go to more defensive stocks. So the investors will move to defensive stocks. Just want to talk a little bit about the nervousness of the market. There is an indicator which actually measures the
nervousness.
Yeah, the nervousness of the market. Yes, it's called the VIX, VIX, and you can find it. It's called the CNN Fear and Greed Index, and it is has a ticker of VIX. And currently, that, or let us just say, it has a range from 0, which is extreme fear, to 100, which is extreme greed. So currently we're sitting at 44. So it is, if you take 50 as neutral, then 44 is just edging into the fear region. I think with this whole coronavirus, people are not sure if it is contained. Every time when they release figures of how many more people have been affected or how many more deaths have occurred, then it will affect the investment market as well. And so, because people are fearing a global slowdown in the economy, and that will affect stock prices as well. So this is, if I just bring this a little bit more into perspective, a month ago, this Fear and Greed Index sat at 74. So
wow.
It was really a very positive outlook, more into the greed, very strongly into the greed region, and it was very positive outlook. That was before the coronavirus hit. A week ago, it came down to 55, so it was still on the positive side of neutral, and in the last week it dropped from 55 to 44. Closed Friday on 44.
Must be because of the Italians. That's now been the biggest outbreak of the virus as well.
So it's getting closer, yes, to in Europe. So that is just to say something about overall what's happening in the market. Now, if that is happening in the market, then investors, money doesn't just disappear. So investors are just looking at more
other places
stable places to put their money. And obviously what we have seen in the past as well is gold is a place to run to. So, and we have seen, I mean, on my current watch list, I have more than 7 gold companies suddenly appearing. So it just shows you that there's a definite rise in prices due to what's happening. Also, the gold price has broken through the $1,600 mark. It sits at probably around about the, I think last time I looked, it was 1664. It might have changed a little bit after that. But that is just where we are sitting with gold. So it is good to look at gold at this time for some investment and how you can position yourself. Yes, gold is 1648 around at the moment. So that is quite high. We are so the first one I want to mention in the gold segment is there is a fund which it's called the SPDR Gold Shares. It's an ETF, exchange traded fund, which gives you basically the fund offers a cost-effective way to access gold bullion, the gold bullion market. So here we're looking at well, it started this one. This is just a very small chart from the 20th of December. So this is what's happened in this year. So just in this year, the price went from well, around about $140 to $154 on this fund, and they just show they are invested in different gold shares. So you don't just have one gold mine, but this exists and covers a few gold mines or globally. So it's more ETF is normally a better way or just more safer way to invest. So this is one to look at, always a good one to look at. So it sits at the moment at $154.70. I'm going to mention 5 other just single gold mines or tickers that you can look at as well. Just mentioning the gold market. So the first one I want to mention is DRD. I have invested in DRD so many times before. DRD Gold. Let me just bring a bit more perspective into this one. As you can see, also since last year, this is just last year from this point here. This was the 31st of December, and let me just get that one back again. And it has increased, and then again it has accelerated the increase also in the last week. So as we see that the fear index has has increased, and so the gold price increase, and that is, but this one has just about a week ago gave, we can see it just broke out. If I just go back to this one, it broke out of even a wedge there, but yeah, it broke out of that resistance line, and it's now heading north. So this is DRD. Currently trades at $7.39. So that is something to keep an eye on. We see very high volume, so there's a lot of business happening there currently. It's about double the average volume happening in DRD. This is a gold mine in South Africa, and so yeah, they are doing pretty well. Then the next one I want to look at is Yamaha Gold. So Yamaha Gold is has a huge amount of institutional and mutual funds invested in it. Again, we see it has broken out of its the resistance line there, and it is heading north, all in the last week. Huge amount of volume happening, so it's a lot of trading happening in that one, and Yamaha Gold is gold mines everywhere in the world, globally, from Brazil, America, Russia, Africa, Ghana, you name it, they are everywhere. So and so yeah, that's, or actually I'm lying. What I'm talking about, Kinross is the one that's globally. Yamaha is one in Canada, if I am correct. I have to come back to that one just to make double sure. Anyway, so we have the other one we have looked at as well is B2Gold Corporation. Again, we see it has broken out in the last 5 days with a lot of volume happening there. So it is definitely going north there. We have mentioned this one on the 2nd of February, and with a price of 432, it's now at 467, and it has reaching big eyes. Here we go again. It has formed a resistance level, and it is now just broken out of that resistance level. Yes, and so we can see it is running north. So then also the Kinross one, that is the worldwide one. Sorry, it wasn't Yamaha. The worldwide one is Kinross, and it if I just get to the Kinross ticker, it's KGC, Kinross Gold, New York Stock Exchange, massive breakout there. Also out of a previous high that it had around about in September last year. It broke out from that high and that resistance, and it is really powering strongly north on this one. I'm currently trading at 596. So it's also a lot of institutional and mutual funds ownership on Kinross Gold. So yeah, they are fairly strong. And the last one I want to mention is Almos Gold, and that goes under the ticker AGI. Alamos Gold, excuse me for that pronunciation. Alamos Gold, and we have also, again, we had a breakout of a resistance level here at around about the 850 mark, right, and it is now sitting at 9 $5.24. It's more or less, if you look at the prices, it ranged from $5 to $10. So you can take a pick. All of them have very high volumes where they break out. And as I say, in the current market conditions, this is definitely something to keep your eye on. Just on the side, you may just keep your eye on what's happening with the VIX, and that may give you indication for how long this will continue. So, but this is definitely something to look at. Then I want to just go into something that we are looking at for next week. Just one, and that is the Verb Technology Company. This moves us away from gold. Verb Technology Company. This is the cheapest share I could find, which is, you know, anything worth looking at. So just to play around with prices a little bit. I mean, we've looked at something at $150 today. This is the cheapest one going currently, which is worth looking at buying wise. You see it just broke out of that resistance level there, around about the 180 mark. It's now going for $2.10. This is, it markets cloud-based business software products under the brand name tag on a subscription basis. It's a cheaper share with a possible buy, and we're looking at a target of around about $4. If it reaches $4, you have doubled your money. So this is more in the technology again. Again, technology doesn't stop because of, you know, the fear in the market. It just keeps on rolling, keeps on developing, and so this is something to look at. We're getting in here at the very beginning of the market. You can see just going back, obviously there was some changes in this company, and it looks like it is ready to roll again. So here we go, something to keep an eye on. As I say, the cheaper they are, the more volatile they sometimes are, and also your risk may increase. So just to keep an eye on it. And when you enter, you need to understand your risk, how to manage it. Otherwise, it's just a gamble. You need to understand where your risk is. All right, so this is something one to look at. How am I for time?
Your time is up.
All right, so yeah, there were so many to look at this week. I hope I have covered and addressed some of the concerns out there in the market, just looking at what we are looking at and what we're investing in. But it was a positive week for us, ended up higher than the previous week, so it's a good one. We had a fantastic week until Thursday, and then on Friday, I think, oh wow, it was just yeah. It was such a, I don't want to call it a bad day. It was just a day that just made you think, okay, but I'm still better off than what I was before. So it is just how it goes. Not everything goes up in a straight line. That is the market for you. So, but we invest wisely with calculated risk, and so we invest for profit.
Just want to say, if you want to learn more how to trade, remember to check us out at significant-trading.com, and or ping us a message in the chat box, and we're happy to chat to you.
Yes, and if there's any shares that you want us to look at, or any conditions in the market that you want to talk about, please also message us, and we will love to talk about that with you. Thank you so much.
Okay, and we'll see you next week.
See you next week. Happy trading.